it looks like it's streaming to me.
Okay, we'll call the Crow Wing County Board of Commissioners Budget Committee meeting for Thursday, July the 9th, 2020 at 9 a.m. in the historic courthouse to order. And first thing on the agenda is 2019 audit summary.
Can you hear me okay?
Oh, you can hear you.
Oh, this almost sounds like I could be on the radio.
Just give us your name so that we know who you're.
Will do. It's been a long day for me already, so I apologize. But all right, I am Doug Host. I'm an engagement principal with Clifton Larson Allen. And with me is Kristen Hool, who is the engagement director for your audit. And the 2019 audit is done. Right. Yay. I know I've been doing this for 29 years, and this whole audit cycle for all our clients has been, I hate to use the words unlike any other, anything we've ever seen before, because other people have used those words, but it's true. And, but it's done and met the deadline. So, we put together this little PowerPoint that we will walk through today and try to hit the highlights of regarding the audit. And on page 2 is just the agenda. I'll give a little more introduction. Actually, that kind of was the introduction already. There's some required communications I have to go through for audit standards. Kristen will touch on our testing of internal controls, Minnesota legal compliance testing, and federal single audit internal control and compliance testing. I'll do a little financial analysis on how the county did in 2019, and we'll wrap it up. So that's our plan for this morning. Shouldn't take too long. All right, so page 4. Required communications. Audit standards dictate the testing we do and the reporting that we do. And one of the requirements is we need to communicate to you, the board, certain things. We do that via a 4-page letter that I believe all the board members have as well. It's very boilerplate, so we won't sit and read that word for word. I'll give you the... You've heard of Cliff Notes versions of books. This will be the Doug Host version of the required communication. So one is we issued a clean opinion on your financial statements. That's good. I'm also happy to report that we didn't have any disagreements with management when we did the audit. If we did, we're required to communicate that to you. But no disagreements. And truly, if we encounter difficulties in performing the audit, we're required to communicate that to you. And even though the pandemic hit, COVID-19 threw everything upside down, that doesn't even rise to the level of difficulties in performing the audit. Prior to all that even happening, we were taking a 3-phase approach to the audit, where the first phase we come in and we look through all the invoices, not all. We do our testing of the invoices and the receipts, and we're required to do lots of interviews of people, and we did that like right before year end, I think. Yeah. And then shortly after year end, we did phase 2, where we come and do all your testing that's required for the federal grants that you receive. And we need to be working with your caseworkers and sitting side by side with them and working through the Maxis system, Med system, and there's a lot of direct interaction. And we got through that by the end of February, I think. So our 3rd phase is where we do the number crunching and testing the financial statement information. And that was scheduled for April? Middle of May. All right. Well, courthouse was closed. Our firm was recommending, no contact. But since we had all that direct contact testing done, we worked with county staff, said, okay, what can we do? Can we still get through this phase and get your audit done? And we actually got through it. County staff scanned additional items that they normally would have just handed to us if we were sitting in the Jinx room. more sharing of electronic files. And in the end, we got all the testing done that we had to, or are required to do. And the audit actually is done 2 weeks earlier than last year. There were times I was sitting at my desk and reviewing the work that staff had done and for your audit. And I don't know if this has ever happened to you, but I was shaking my head in a good way, because I'm like, how is this being able to be pulled off? I mean, there's never been anything like this pandemic. And the staff internally are dealing with all the COVID-19, all that additional stuff. And the audit still got done 2 weeks earlier than last year. So I just want to thank everybody at the county for being flexible and being open to brainstorming new ideas on, hey, how can we get this done, even though we're not sitting in the conference room. So thank you to everybody. It was a really neat experience. And one last thing I'll touch on with this is I've talked to people from other firms and actually even other offices within CLA, and they haven't experienced the same situation where they're actually experiencing, oh my gosh, we can't get this audit done, we can't get that audit done because of COVID-19. But that didn't happen here due to great efforts by all involved. Your audit was done 2 weeks earlier than last year, so great job and thank you. So with that, I'll turn it over to Kristen, who will talk about internal controls.
So as part of the audit, we're required to report any internal control deficiencies that we find. There's 2 categories: material weaknesses and significant deficiencies. You only had one between the 2. You had a material weakness, which is the more severe of the 2. It's that a material misstatement could happen that might not be detected. So the only one that you had this year were for your audit adjustments. There were minor things with that, just a couple things. GASB 84 was implemented this year, so we helped with that. It was started and then we came in and helped get it to where it needed to be. That was where the fiduciary agency funds actually now converted to some custodial funds, private purpose trust fund, and some even moved into the governmental funds. So the other one that we had found that was a material in nature was the restatement for local option sales tax. There was an accrual that wasn't, I can't remember if it, I think it was booked last year and shouldn't have been, vice versa. So that was the only 2 things. Otherwise, like I said, there's no significant deficiencies. So everything else was great. We did resolve one other finding from last year, the financial statement prep, since now Nick, Emily, and Corey are all on board this year, and we're able to do that. Moving on, Minnesota, yes.
Yeah, for the material misstatement for GASB 84, that is a whole new process that GASB implemented for us this year. That was just the nature of trying to get the system set up to support the new way that financials need to be reported. As for the local option sales tax, at the time when we initially did local option sales tax, we did have conversations with the Department of Revenue on how to record those January and February funds. They pushed us down the path of if we collected it in December, that was for that year. If we collected it in January, we started counting that for, in this case, 2020. Based on the new guidance that actually changed, anything we're collecting in January and February actually relates back to the prior year. So now we need to move that back. They got different guidance than what we had in the past, so we adjusted to the new guidance that was out there.
I guess I don't understand that. So when we started collecting the sales tax, it was like in January or February, so that's when the calendar year starts?
So when we collect our sales tax, what we're actually getting, say, this month relates to 2 months prior. That was actually collected by the retailer 2 months ago. So because it was collected back at that point, the state recognized it the following month, we're actually getting it the month after that. So this relates to, so if whatever we collect in January is actually related to last year's collections. So we need to accrue those as if they occurred in the prior year,
So we can't,
receive the funds until
till January.
you can't really close the books out until you know what that number is?
Right.
Why would that be a material weakness? That doesn't make any sense to me.
Well, before I touch on that, if I can just give a little more background on the whole situation. The state of Minnesota sends a spreadsheet summarizing all the year's local option sales taxes. And I'll be honest, it is extremely confusing because this one amount is monthly sales taxes, has 3 different dates applied to it. And that, this isn't just unique to Crow Wing County. This has happened in, I think, probably, this is the way it had been reported in all counties that, at least that we audit, because up until this year, we had the exact same knowledge and understanding as how the county had been doing it. What happened was, a different county we audit started sales tax in 2019. And when we were doing that testing, they only and it started January 1. And their financial statements only showed 11 months of sales tax revenues. And I'm like, how come, why would that be? Because you've earned that sales tax. There should, if you started collecting it on January 1, accounting standards say there should be 12 months of revenue. So I called the state and said, all right, clarify for me why this other county only has 11 months of revenues on their financials. And they're like, well, no, they should have 12. So basically, I'll try to summarize it. On January 1, if somebody went and bought gas at a gas station, paid sales tax, at that very point, that's when the county earned that revenue. But that spreadsheet that the state had been sending to the county and to us, because we confirmed with them to make sure that the numbers were all in sync. But that spreadsheet, it depended upon which of those 3 dates you attached to those sales tax collections would determine whether or not it ultimately ended up being the February sales tax that you received related to December of 19. But in the past, based on that spreadsheet, and we were under the same understanding, is that would have been reported in 2020 in the old days, but this,
Okay, so then,
so we learned at a different county, and then we started auditing here, it's like, oh, no. But whenever the prior, now I'll get back to your question.
I understand
Yeah.
what you're saying.
Okay.
Okay, so, but why
A material weakness.
Why is it a material, to me, the word material weakness sounds like Crow Wing County, it's a black check against, or a red check, or whatever you want to call it. Why would that be a black mark against us? That isn't our problem. That isn't our mistake, I guess, if you'd call it. It isn't something that we intentionally did wrong or was trying to, so why would that be put as a material weakness against us? That doesn't make any sense.
The audit standards require us, so basically your last year financial statements were misstated as well. And the previous year before that, and the previous year, going back to the very first year you did your local option sales tax, that year, those financial statements were misstated. And I can't remember, do you remember when you started?
Mr. Chair, can I help shed some light on it?
Sure.
Paul, what the auditor is responsible to do is to determine whether or not the financial statements that we have produced are an accurate representation of reality. The term material weakness is used in the accounting field to represent that the financial statement was not entirely accurate And so it calls it it's material. In other words, it's significant enough to note. It's a weakness insofar as the financial statement was not accurate. Anybody who reviews audits, let's say bond counsel, people that are looking at audits that are going to use the audit for some purpose, would recognize that that is not a significant enough material weakness that it resulted in a note to our financial statements. And so when you get to the level where it is a note to the financial statements, instead of being just noted as a material weakness, it's not the same thing. And so I understand where you're coming from. I don't love the term either. It does make it sound like what you described. It's just a term that they use in the audit field to recognize something that was not accurate. It's through no fault of ours and through no fault of, Clifton Larson Allen. It's just an inaccuracy that needed to be corrected. That's all it means.
Great summary, actually. And if it would have been, I forget the exact amount, but, well, let me check quick.
Part of it is because of how much we're collecting is what we
Right.
period. Because we're
Exactly.
collecting
Yep.
millions of dollars instead of hundreds of dollars, that's what turns it from immaterial to material.
But the audit standards in the reporting says, if it's above a certain dollar threshold, and that's why I don't remember what our materiality levels were, but if it's above this threshold, they want us to put this in, or we're required to put it in here, just so anybody that reads the statements will know, hey, last year's were off a bit. But if it was off $10, then we don't have to include that note because it's inconsequential.
So then why would it be like just some regular person like myself? Let's say even though I sell something in December, but I don't receive the money until January, then when I do my taxes, I can't say, oh, well, I got the money in 2020, but I'm going to put it in my 19 taxes. You can't do that. So why is that a different?
That's called a difference between book and tax reporting. So for taxes, you're right, that's reported on a cash basis.
Right.
If you got the cash between January 1 and December 31, you claim it, right?
But it'd be this, to me, it almost seems like the same thing here. Yes, being that that money was collected in December, but we didn't get it, we didn't have it on our hands until January. Why would it be booked? That makes,
So we do our accounting on the accrual basis, and being on the accrual basis, we recognize the revenue or the expense at the time that we incur it. So if it happens on December 31st, we recognize the revenue, even though we didn't get cash, we sent out a bill, we recognize that as revenue.
yeah, but you don't know how much December was on December 31st. You don't know what the amount
No,
was.
so when it
do you?
comes to the financial reporting at the year end, we actually capture January, February, and a portion of March in all of our financial stuff. We actually have staff go and mark items if they relate to 2019 expenses. They mark that in the description so that we're able to pull that out and apply it back to the 2019 financials, even though it occurred in 2020.
And that's
And
exactly
if I
in
can add
accordance.
just a little bit,
Yeah.
Paul, it gets more confusing because when we're looking at our accounting on a day-to-day basis, we operate on what's called a cash basis, and that's what you're talking about. We receipt the money into the month in which we received it, but then when we produce financial statements, because of GASB standards, we have to switch to what's called a modified accrual basis, which does make some adjustments necessary in order to credit them to the correct month in which they were actually incurred as opposed to received. And so every year, we have to go in at the end of the year and make adjustments to our end of year budget figures to reflect these accruals that we are aware of and credit them back to the correct month in which they were actually accrued or incurred, as opposed to when we got the cash. just makes government accounting all that much more complex. And I wish we could either have a full accrual basis or a full cash basis, but we don't get that luxury. And so it's every year we have to go back and make these accruals. This is really nothing more than just the timing of the difference between when it was incurred and when we received it.
You know, Tim, can you hear me?
Yep.
You know, just with all due respect, I guess I'm getting kind of a report from the auditor, and I guess I'd like to ask the questions to the auditor, and I want them to give me an answer right now, if that's okay with you.
Absolutely.
Okay.
The way the county records the transactions is exactly the way the accounting standards require it. There was just, in regards to this one item, and it's really just one receipt out of all the receipts that the county reports. The way Nick explained it is exactly in accordance with the financial reporting standards. It's just based on the new support from, or new guidance from the state of Minnesota, and clarification of the spreadsheet that the state sends to the county and to us. There was one additional month that needed to be recorded. If I can explain a different way, when somebody pays taxes at the gas station, right? In a perfect world, the next day, they turn around and pay that county's portion of the sales tax. They bring it over to the courthouse. Well, logistically, that's not possible. So the way the process works is the gas station collects the sales tax for the whole month, and by, I forget, I think it might be the 10th of the following month, they have to send that money all to the state of Minnesota and do some reporting to the state of Minnesota. 1 month later, the state of Minnesota takes that money and sends it down to the county.
Right.
And so there's a 2-month lag from when you earn it to when you receive it, and the accounting standards, the governmental accounting standards say you have to report, even though you haven't received it, those revenues that were collected at the gas station in December in your 12/31 financials.
So I guess I'll get over this in just a little bit here, but this material weakness thing kind of I'm a little bit hung up on that, you know, where I feel like okay, so if the state says, hey, you're not doing this the right way, okay, so we correct the way we're doing it. Why would you say that, oh, that's a material weakness? It feels like we've made a mistake, and it isn't our mistake. It's the state telling us, no, you're not doing it the way we want you to do it. Do you follow what I'm saying? I guess.
The State Department of Finance,
Yeah.
I'm not sure that they never look at your audited financial statements.
Okay.
And that's what this is related to. It's more of the audit standards requiring certain communications. That's all this is. It's a required communication to say, hey, you know what? The 2018 financial statements were off by about $500,000 because of this 1 month of revenue. The material weakness, when you take that plus the assistance we had to give for GASB 84, if it's the total dollar amount is over a certain threshold, audit standards require us to communicate it to you that, hey, we had to tweak a few things. One last point. I do a lot of audits, and you have one finding. I hate that term too, but this is the only required communication. Less than 10% of all the audits that I do have either 0 or 1 of these communications.
Okay. Maybe if it was-
90% of everybody else has 2, 3, 4, 5, 10, 17. So, in my opinion, this is a clean report.
Right.
Oh, my goodness.
Maybe it's just because I don't, the term just the term kind of irritates me, I guess. And you know, and I know, looking over here at Deb, I mean, Crow Wing County has received awards, you know, and so it just, doesn't seem fair, but
And we
Fair
received
is-
those awards with material weakness noted in our audits.
Well,
So it is, I agree with you, Paul, the term is
Misleading.
misleading.
It is misleading.
It doesn't really give that true picture, but I think it's the fact that the materiality exists and the fact that there would be opportunity for fraud if that wasn't pointed out. So the fact that because of the dollar amount of what we're talking about, there could be an opportunity for some misstatement that would occur in that particular situation, which is what causes it to be material.
sure, all right, well,
For
One more
20
thing then.
yes, sir.
All right, the federal agencies that do look at your audited financial statements and your reports, and the state agencies that do look at it, last year, we had 4 of these required communications. This year, there's 1. They will look at that, and what conclusion do they take from that? Holy cow, the county had things last year that were identified that they could tighten things up on. Hey, they did. They got rid of 3 of those 4. So that I do know they look at, and even like bonding agencies probably.
So they're all called, like last year you said 4, so they're all called material weaknesses.
So,
No,
required communications,
okay.
because some I think were
What's the difference
significant.
between required communications and material weakness?
There's required communication, that's when we have to tell the board.
Okay,
Okay, that we're required to communicate it. When we have those, there's 2 buckets, material weakness
yes.
and significant deficiencies. And unfortunately, which one do you think in audit standards is more significant?
Material weakness?
Well, a lot of people would think a significant deficiency is different or worse than a material weakness, but you are correct. The material weakness is up here, significant deficiency is down here, and it's all, that part, which bucket it goes into is based on audit standards and, or audit judgment. And,
Yeah, and I understand. I think it's just that the term is just kind of sets me off, but that's fine.
All
I
right.
guess, yeah. Go
Cool.
ahead.
We don't like it either.
Yeah, okay.
But remember,
But next year,
you,
gonna be good.
less than 10% of the audits that I do, and it's like 50 each year, have either 0 or 1 of these.
And this
Yeah.
is one that next year will be gone. I mean,
Right.
we don't really even have to do anything because we've now made that change. We know it has to happen. We won't have this one on here next year.
And then,
Next year we'll have
if
0.
you get to 0 next year, I think there's
That
only,
changes rules so that we can never get to 0
no,
sometime.
no. But if you get to 0 next year, I think there's maybe 1 a year that I have where
Okay.
there is.
Always got to find something wrong, I'm sure.
Yeah.
In
Well,
a way.
otherwise you wouldn't think we were doing anything, right?
All right.
All right, Kristen, sorry I interrupted.
Oh, no, that's fine. So the next bucket that we want to talk about these required communications is Minnesota legal compliance. So the state auditor's office requires us to go through checklists, there's about 25 pages worth, and look that you're following those state statutes. And we actually found nothing, so there are no findings, if you want to call them that, under this bucket, and you didn't have any last year either. So that's great, that everything is being followed for state statutes within the county that we're required to look at. And then the last area that we're required to report on would be the federal single audit. And I'm also happy to announce that there's no findings this year for that. There were 2 last year, both under medical assistance. Those have been resolved. That department worked very hard. One of those was eligibility, which is great, because that is a hard one to resolve, just because of the caseload over there. We did test this year medical assistance, child support, and temporary assistance for needy families, TANF. So that was very
So
great.
just,
One more year with those findings to be not considered a high risk, or is
No,
that
that, yep, 2.
2 more years?
so this is just kind of an observation sitting here. Okay, so let's say somebody's sitting at home and they're watching this and when they see that, oh, the county's getting their audit done. So when I think of audit, I think, well, you're just looking at all the numbers. But in reality, you're not just looking at numbers, and if you could explain that, you're not looking at numbers, you're looking at numbers, but you're looking at everything overall that you're auditing, whether or not we're doing a state program or federal program correctly. Is that right?
Uniform grant guidance requires us to test your federal programs if they're over certain thresholds. So since you're receiving enough funding, then we have to look at your larger funds, risky programs, and that's how we do a risk assessment to select those. So for example, TANF actually fell this year at the last minute above 750,000, so we had to come in May and test that one.
So what does it mean when you say you test it? Tell them a little bit about what that looks
Yep.
like to test.
So what we do is we go through the internal controls that are present for that program, talk to the lead financial workers, caseworkers, see what controls are in place. We test those. We look at eligible disbursements to ensure that those are eligible per the grant agreement. And we also look at, for like TANF and medical assistance, the case files. So we look into the case to Maxis, the state system. We compare it to the case notes they have and ensure that what the federal guidance is requiring them to have in place, they do.
Yeah. So it's,
So we look-
so the answer is yes, that
Yes.
you're.
We're
you're not
looking for
just- you're not just-
compliance.
You're not just crunching numbers, you're actually looking to see if we're in compliance of doing the programs the way that they're requiring us to do it, correct? Yes.
Do you have anything to add?
No, yeah. Auditors do much more than just crunch numbers.
Right.
And that phase one part of our audit where we were looking at all the controls you have over the receiving and dispersing. I mean, you have good processes in place where for a disbursement to get paid, somebody's got to prepare the invoice for preparation, and then another person reviews it to make sure it's legit and that the amounts are correct. And that has nothing to do with the dollar amounts that show up in your financial statements. But the controls and the processes, yeah, we take a fine-tooth comb through that during the year. We test your compliance for federal requirements, state requirements. And then in the end, that's the numbers part, that phase three. So,
Okay.
fortunately, we were on site to be able to inquire and interview people all across the county on what they do in the receiving and dispersing and investing processes. But a lot of what we do is analyzing internal controls, which, yeah, my kids thought for the longest time accounting was all just add numbers, add numbers, add numbers. But as auditors, we do a lot of other analysis of internal controls, so.
Yeah.
Yep.
Has something changed this year? You know, when I was the chair, I don't know if it was been 4 or 5 years ago, I don't know what it was, but I was asked by the auditor when it started, that if there's any places that I felt that as the chair, where you should focus on, but nobody asked me that this year. Is that something new, or?
No, it's still audit requirement, but we rotate who we ask those questions of each year. It doesn't always involve the board chair. So
Okay.
we rotate
And
it.
who was it this year?
I think it was,
I think it was Steve.
I think so. But it was back in, were you the board chair?
No,
Maybe it was Rosemary after.
No, it was, I remember meeting with you, Steve.
You're right.
I'm pretty sure it was Steve. Yeah, okay. So we just do it on a rotating basis to gain a different perspective. And sometimes, whatever, 5 years ago, if you were the board chair, that was probably when the state auditors were still here. But we do it on a rotating basis to make sure we get different perspectives from year to year.
Okay,
Okay?
that's it?
That was it.
That's
All right,
it?
so we can switch gears to some financial analysis at this point, and we're on page 13 of the PowerPoint. Honestly, I think up until now, in our viewpoint, only having one of those required communications, things have all been pretty bright and cheery. If that's the only item we have to talk about. Now we'll turn to the financial results. And if you look at this chart, this is a metric that we calculate to evaluate the county's financial stability. And it's a calculation of the number of months of expenditures that you have in reserves in unrestricted fund balance of all governmental funds. How long can you go until, let's say, the tax collections start coming in May? So in the chart, we show 5 years. And 5 years ago, you were at 5 months of reserves. And there's various organizations, including the state auditor's office, some national organizations, that recommend a minimum of 5 months of operating expenditures, or 35 to 50% of operating revenues for the general fund, special revenue funds, as a good cushion. There is no law about it. It's just various entities have weighed in saying, it's just like your own personal finances. You should have, X number of months saved up in case something happens. Let's say, like, I don't know, maybe a pandemic, right? So, I know you're sitting at 2.55 months. And this includes all governmental funds. This also includes the debt service and capital projects. So this is the county as a whole. So 2019, your reserves decreased about a half a month from the prior year. In the prior year, it decreased a half a month. And the year before that, the reserves decreased a month of, how long you can operate. So this chart shows a trend. And if you continue this trend, where do you think we'll be in 3 to 4 years? Be in rough shape. The fact is, in 2019, you increased the levy. I think it's 6.99% or 7%. And there's some slides I'm going to go through in a little bit that you increased the levy, and this number still went down. So we'll talk about losing a half a month of these reserves each year. And at some point, you're going to have to get that curve going back up. So on page 14, we look at where the county's revenues are coming from. A couple things I'd point out here is,
So just let me
Yeah.
stop you there.
Sure.
So then is that a reportable deficiency then, when you see that number? Or do you take into account that we hired 19 new people last year in that budget also, or?
the budget doesn't really impact that situation. It explains why your reserves went down. Doesn't change the fact that now that if they're on the payroll, that those costs are going to be in your overall expenditures for as long as, for how long.
Right.
But answer to your question is no, we're not required to include a reportable or required communication
Right.
if your fund balance levels are down like a half a month from the prior year. I mean, at some point, if that goes negative, if you have negative fund balances, we do include note disclosure in your financial statements for whichever fund that includes. But yeah, audit standards don't require us, if you have declining fund balance, to actually put a required communication in there.
Yeah. And the way you lay this out, that we're a half a month going in the different, I've never heard it that way before. I know I've heard that, the state auditor has a parameter of where our reserve should be. Where are we sitting as far as that's concerned?
I'll get into that in a
okay.
couple slides. There's multiple ways you can analyze these fund balance reserves, and they're all good. And using multiple tools helps to gain an overall perspective of fund balance. But we dig into each of the individual funds in a couple slides here. And I think that'll tell a pretty good, or explain it pretty well. But But as far as the revenues go, taxes were up about 2.5 million. And biggest chunk of that was that 7% increase in the property taxes. And your sales taxes were up about 600,000. So at the beginning of the audit, we have a meeting, we do a lot of planning, and we do risk assessments and, develop expectations. And, as far as these revenues go, we expected your tax revenues to go up about 2.2 million or whatever, 7% of the prior year levy was, because we knew that's what you increased the levy. So the other big change in your revenues is the intergovernmental revenues, which are state grants, federal grants, and shared revenues that you receive from the state. And the biggest one is highway user tax. And in 2019, the county received $4 million less of highway user tax from the state of Minnesota. And also $2.2 million less of federal grant revenues from the feds for highway planning and construction grants. So,
When you say that, are you saying from the previous year?
yeah, from 2018.
Comparing.
Yeah.
But you're not comparing back, you're
I didn't-
just from the previous year.
Right, just to the previous year. Because like when I look and see, oh my gosh, a $6.4 million decrease in intergovernmental revenues, I kind of want to know what happened. Does this happen sometimes? Yes, because that highway user tax that you get from the state, it does this. It's not a straight line. It fluctuates significantly year to year. And honestly, when you're setting the budget for like 2021, you don't know exactly what that highway user tax is going to be. Same thing for the highway planning and construction grant. You might go 3-4 years and never get it, but because you did get it in 2018, that spiked your intergovernmental revenues last year. But then it dropped because you didn't get that same grant money in 2019.
But that
2018 also had the flow-through to Pequot Lakes for the 371
Right.
project as well.
Right.
That was a $4 million swing for us as well.
Okay. So overall,
So that's nothing to be concerned about.
No,
At
it
all.
just-
I mean, that, if they were gonna redo a road through Crow Wing County, like 210, and we had to participate in that, I would assume that we'd be getting some revenue
Yeah.
from that.
yeah, just because things change doesn't mean it's bad.
Right.
But when it does go down, many times I get the question, holy mackerel, what happened to our such and such revenues,
Yeah.
So as we're doing the audit, we're looking and asking ourselves the same question. That's why I just noted, all right, hey, we know your intergovernmental revenues were down 6.4 million, but there's a reason for it.
Right.
The state sent you 4 million less and the Fed sent you 2 million less.
Yeah,
So,
okay.
okay. But overall, your revenues were down 2.6 million, grand total, which is about 3%. So page 15 looks at where the county spent its money. And I apologize for the chart. The top is all cut off. So really, if we look at the table mostly here, it makes it a little bit easier to see what's happening. But overall, the general government type expenditures were down about 700,000 from the prior year. And the main reason for that was there was less capital outlay, capital project type activity related to the general government functions like auditor, treasurer, admin, IT, recorder, all those general government type expenditures. The public safety area saw a $3.2 million increase in the related expenditures to the public safety function. Basically, all of that is accounted for by the law enforcement center remodel expenditures in 2019. Highways and streets was down about 3.5 million from the prior year. Why'd that go down so much? Because the state sent you less highway user tax money and you didn't have that federal grant money to be spent on other road projects. And then human services was up about 1.5 million from the prior year. And really two big drivers of that. And one is the out-of-home placement costs were up about 700,000 from the prior year. And actually three things. Then there is not quite a $200,000 increase in the MFIP. Employment services, a lot more demand for those services in 2019. And then just salary and benefit expenses over the year were increased as approved by the board. So on the expenditure side, grand total, we saw a $1.3 million increase in expenditures. And on the previous page, your revenues were down 2.6 million. And that's going to equate to about a $4 million decrease in your reserves overall. When that happens, your overall reserves and the number of months of reserves that you have as a cushion is going to go down. And that's what that first chart in this section reflects. So on page 16,
Before we
Oh,
move
yeah.
on, before we move on to that, on page 14,
yep,
if you look at the interest and investments, it looks like 15, 16, 17, it looks like it's bumping along, and then 18, it bumps up significantly, and then 19, it bumps up very significantly. So why would we see that? Would we see that like the market was doing great, the interest rates were,
Part of it was the market doing good, part of it was we had CDs that matured and we reinvested them into different vehicles. It was a change of our allocation of our portfolio, and some of the work that we did with the Rama Trust, that they come in and we made those changes, that's reflected in 19 for the first full year.
and I think there's also a little piece of this thing called unrealized gains.
Unrealized gains, yeah.
Yes, and you're sitting on an investment. This is, thank you, Governmental Accounting Standards Board for this, but, so if some of the investments that you have fluctuate, like if you own stock or have a mutual fund, you know, their value fluctuates
Right.
from day to day. I think, if I remember right, Kristen, the county has some of those investments where they do fluctuate, but you didn't realize it because you didn't sell those investments, but out on the market, their value does fluctuate some, and when that fluctuation happens, the audit standards and accounting standards say you got to record it, but the very next day it may go down, and then you'd have a reduction in
okay,
interest.
so this could be the market is going good, and we take a snapshot that day of what the value is, and that's what's reflected here.
It's just a snapshot as of that day. Yep, great.
So this, you could be here next year, a year from now, and this 1.8 million could,
Go drop back down.
it could be way, I could be $1 million off.
It will be significantly lower next year.
Yeah. And I actually have seen and had audits where that interest revenue becomes negative because of that market value fluctuation.
Okay.
Yep. I don't think that'll be the case here,
Case here,
but I,
significantly less for 2020 for a couple of different reasons.
Well-
One being the market, one being we're having to utilize some of those funds that are invested.
Right.
So they won't be earning interest.
Okay.
yep. Okay, page 16, the general fund. Here's where we get a little more granular, or look at the major funds. So at the end of 19, the general fund's unrestricted fund balance was about 4.2 months of expenditures. That's a little bit below that recommended minimum of no less than 5 months. For the year, the general fund revenues increased about 1.4 million. The expenditures increased about 1.3 million, mostly due to some bumps in pay to employees for salaries and benefits. So if you look at the chart, the 5 years are shown, and in the last 2 years, the general fund expenditures have exceeded the revenues, and that's the first time. Those are the 3 years prior to that, the revenues had always been exceeding the expenditures. So if you look at the bottom line in the table, you can see that your general fund reserves are down about 2.2 months over this from 2015 to 2019. That's a 33% decrease in your general fund reserves. The expenditures have gone up over that time frame about 1.4 million, and the expenditures are up 3 million.
Are we in the unrestricted funds balance, are we within the state auditor's guidelines?
You are below the state auditor's recommended minimum fund balance reserves.
By how much?
That would be 3/4 of 1 month of the recommended minimum.
3/4 of 1 month, okay.
3 weeks. I guess
Okay.
3
I
out of
guess
4
you're-
weeks
you're-
would be 3/4 of a month.
I guess
Yep.
I've never I'm not used to somebody saying it by weeks. I think it was just, I was just looking for dollars, but you're doing it a different way. That's fine.
Yeah, basically, the general fund, if I do the math real quick in my head, you have 2.5 million of expenditures on average per month. And at 4 months would be, you got 10 million of fund balance. So you got 10,400,000.
How much?
10,400,000. No, that's what you have.
That's what we're at.
Yep. 5 months would be 12,500,000. So you're about 2 million below the
Below.
recommended minimum,
Right.
the floor.
Okay, that's helpful.
Yep.
Thank you.
Okay. And that math is all just sort of rough.
Oh,
up
yeah,
here.
yeah,
But
I
I think it's
understand.
pretty close. I'm pretty good at math sometimes.
Yeah.
Oh, all right. So highway fund. So for the year, revenues exceeded expenditures, actually for all the 5 years that we're showing. And the 2019 fund balance was up about 1.1 million due to timing of when the state sends you, the county, the money. So this fund ends up at 4.87 months of expenditures. That's real close to that recommended minimum, all right? Back in 2015, you had about 2 more months of reserve, so that equates to about 2.4 million more reserves in the highway fund back in 15 than you do in 19, just using rough numbers, instead of looking at as the number of months. So just below the recommended minimum and definitely up from the prior year. So that's good news for the highway fund. Page 18, this is the Community Services Fund. The last 5 years, the expenditures have exceeded revenues, and it's pretty typical for us to see increases in the expenditures, community services. I am seeing some community services funds with decreases in expenditures, though. And the primary driver is the out-of-home placement costs have been dropping in these other counties. But that's not what we saw here in Crow Wing County. We saw those costs were up about, I think it was 700,000. But this fund has, in essence, it says 0.3 months of reserves, but that's not very much. We have a little over $2 million per month on average of expenditures in this fund. So that's about $70,000, just ballparking in my head. This fund has no reserves. Now, granted, there are revenues that come in January and February as reimbursements for costs you incurred in November and December. It's a timing thing, but this is 4.7 months less than the state auditor's office recommended minimum of 5 months. So that's about 10 million. To put it in dollar, to look at from a dollar standpoint. Is a 2.36 month decrease over that 4 or 5 year span. Public land management on page 19. The current year revenues exceeded expenditures by about 19 grand. So that's going to bump up the fund balance. This fund now has negative unassigned fund balance. There's a bunch of money sitting in this fund that's restricted by state statute that you can't just use it for anything. So this calculation is really just, or this analysis would be based on that unrestricted where you have some control over it. And that amount is actually even negative as we ended 2019. So because there is no unrestricted fund balance, this fund basically has 0 months of expenditures. And, based on 2019, because a lot of this is in and out in this public land management fund, that even the national or organizations or state auditors, it maybe doesn't really lend itself to having no less than 5 months of reserves as well, because it's more in and out. There is usually a little bit left over, but,
This is actually deliberate. We deliberately spent down that
Oh.
unrestricted amount, you know, what we talk about every year with regard to that account, because we need to do that. Otherwise, the fund could just continue. That action is deliberate, not deliberate.
Page 20, we look a little analysis of the landfill enterprise fund for the 5 years that we're reporting, and actually even the 6th year. We've seen increases in the net position. The 2018 increase was the 469,051 that's on this slide. That's 2018's. 2019's was a little over 435,000. So this fund's showing net income for the last few years. But one thing just to point out is the bottom row in the table, the number of months of expenses or reserves that this fund is maintaining is down 15 months. Again, when something changes that significantly, I'm like, okay, we need to know why this happened. And because of the construction on, I believe it's cell number 5, there's that now became a capital asset. And when that happens, your reserves in this calculation go down because that money is now tied up in the capital asset as opposed to sitting in the bank. So that explains why there was that big decrease.
Okay, so I got a question. This is, you know, I don't think you know me, but as you're explaining things, lots of ideas pop in my head, and I think some are good ideas, and some are crazy, and some are stupid ideas. But is there any way that this is just kind of a harebrained idea, but if you said we're making a profit out at the landfill, so it's a profitable operation. So all those dollars of profit that we make there, the way it's set up now, have to be reinvested into that operation, correct? And what I'm getting at is, okay, so let's say that produced revenue and we had some kind of a special fee on there, and we could use part of that revenue to run operations here. I mean, and if we're not, I'd be concerned if we were doing that with multiple businesses for Crow Wing County, but nobody else has a landfill in
Right.
Crow Wing County,
Yeah.
so.
It's a great question. And I know this is maybe not what you want to hear, but the answer is it depends.
Oh, okay.
But I can give you a little example. Or two analogies maybe. Many cities run municipal liquor store operations.
Right, and
Okay?
that's kind of to my
Exactly.
point.
In many cities, those liquor stores make a profit and they transfer money from that liquor store into the general fund to help keep the levy down. That happens in many cities, okay? And the statutes allow that. In Minnesota, regarding landfill and special assessment dollars related to landfills, there's some strings attached. And you can't, it involves more in-depth analysis as to whether or not you can transfer money from that enterprise fund to other funds. But I have researched it some, and my memory is, oh boy, it's been a long time. It's probably been 15 years. But last time I researched it, there was a county that had a landfill, and they had accumulated resources, and I believe they ended up transferring some of those funds to the highway fund be to redo the roads that led up to the landfill, because those roads were wearing out faster because all the garbage trucks were driving on that road, and
Right.
wearing out the road faster than they would have. But the statutes say when there are those special assessments or whatever, that those dollars have to be used for solid waste type activities.
Okay.
Yeah, does that make sense?
Yeah, it makes total sense.
Okay. Cool. All right. Well, we'll wrap it up here. Bells are ringing. I gotta get done. Okay, so overall, financial stability, your general fund, fund balance at the year end is a little below the state auditor's recommended minimum levels. Highway fund, is also below the recommended minimum levels, but that one does fluctuate a lot based on the revenue sources. Community services trending downward, and just the year-over-year increases in expenditures. The hard part there is there aren't a lot of additional grant revenues that the county isn't already obtaining. You know, you probably know the term unfunded mandates, and that's a lot of what the county has to deal with. But you have the demand for services from the county residents, and you got to provide them. Then public land management's below the recommended minimum levels, but that was planned for. So with that, again, I just want to thank everybody for just being so awesome to work with and flexible on getting us the information we needed to finish the audit. And only one required communication is a good thing, so.
Any questions from any of the other county board members? No? Okay, well, appreciate it.
All right, thank you.
Thanks.
Have a great summer.
Yep.
Thank you.
All right, bye-bye.
2021 operational budget submission review.
So the 2021 budgets were due from the departments on July 3rd. So last Thursday, they were due. In the short period of time we had here, we kind of did a quick analysis of this to try and get an idea of where the current submission is at for levy percentage. This sheet that I handed out earlier, that is our little summary there. Right now, you can see that it is at 11.18% is the necessary levy to balance our budget out in these given funds. Fund 1 has a approximately $3.3 million change from 2020 to 2021. That is a result of DOC contract not coming back for 2021. That is a $940,000 loss of revenue for us. It also includes an additional 9 new employees in there and normal wage increases and other expense increases. That drives us up to
Nine new employees?
9 new employees at this point were submitted.
I thought the county board said that we weren't going to have any new hires.
We did, and that was communicated to all the SMT members multiple times, and they still submitted. There are 12 total in this budget.
So what is Fund 1? I don't know what
Fund 1 is our-
110,
General fund.
general fund, 10 is what?
10 is highway.
Highway, let's just, wait a minute, highway, general,
12 is community services.
yep,
31 is debt service. And 43 is capital projects.
What?
Capital projects, or CIP.
Okay, continue.
In the general fund, we do also allocate $200,000 for fund balance growth. As you just heard from him, we are short on our fund balances. So this allocates $200,000 additional dollars towards growth of our fund balances in general fund. Fund 10 is highway. Their plan is to utilize fund balance. We did get direction from MnDOT that they expect our allocation from the state to be down approximately 15% for next year based on their early analysis from MMB. Based on what we're seeing over the last month or two here, I don't know that that will stay in place. So they budgeted their expenses at the level that they would normally if we have the full allocation, and then captured the potential lost revenue with the intent of using fund balance to deliver the entire program for 2021. This could change based on what MnDOT gives us for further communication. We may see more revenues come back in that fund to help offset that usage in fund balance. For Fund 12, they do expect at this point that 2021 will be a flat year from 2020. So they did see some declines in out-of-home placement and a few other of the areas with adult mental health and other areas like that. They, at this point, believe they can maintain their expenses at 2020 levels for 2021. We do have an inclusion of $800,000 for fund balance build into this area, which we also allocated for 2020. This is to try and get that 0.3 months back towards a more reasonable area. In community services, we have a minimum fund balance by policy, I gotta look at it to make sure I say the right one, of 20 to 30%. So unlike our general fund, which is at the 35 to 50 at the OSA recommendation, because we do get outside revenues fairly frequently in here from federal grants and state grants, we moved our policy to be at 20 to 30%. So it puts us probably closer to a 3-month reserve is where we need to be, using the CLA terms. And this is trying to get us to that point. For debt service, it is a small increase. This is just a result of the way that our debt is structured. We pay a little bit more every year until the debt is completed. So we are trying to keep that up. We have to levy 110% of what the debt service is by statute for this one. Fund 43 actually does build fund balance with the current CIP plan. It allows us for $389,000 in fund balance growth in 43. Capital projects is another area that we are below our minimum. We have in policy a $2.2 million minimum fund balance for CIP. Right now, we're pretty close to zero. So this is allowing us to start making progress back towards our minimum. That was a planned thing in 18. In 2018, we actually used fund balance and shifted the levy revenue out of capital projects to other areas, and then brought that back in the 2019 budget and 2020s. So that's a plan. So at this point, with what everything we have, we're at 11.18% levy increase.
So I guess I'm not following this, because I thought sure that the county board, there was a consensus that we were not going to hire any new hires. We're going to do the replacement. Why would people that are working here submit 9 new employees if they know the county board is not going in that direction?
Right now, we're actually technically at 12. We have 9 within, or actually 10 within general fund, because I forgot Don Ryan has a legal assistant in here as well. And then we have 2 in community services. So right now we are at 12 new staff members requested by SMT members.
Well,
And maybe Tim, you want to answer?
Tim, why would they come forward when, if the word has gone down that we don't want to, in these uncertain times, why would they even come forward with the submittals?
Well, I can't answer the question of why they would come forward, but what I would say, Paul, is that the first submittal of the budget is never the final budget. And I think that the first thing that's going to be scrutinized is exactly those FTE requests. I did communicate to SMT yesterday when we had our brief meeting to talk about the CARES Act that I did not believe that this budget was going to fly. I did not believe that the 11% was anywhere close to where the board was. I also communicated that I thought that the FTEs were going to be scrutinized very, very closely for precisely the reasons that you described. And so what I would say is this is the wish list. This is not what's going to end up being the final for preliminary levy. This will not stand.
Okay, thanks. I would think that, I guess if I was people working here, I guess I'd like to know what direction the county board wants to go with the budget. And so I would think that I guess I'm gonna just go around the room right now and ask, because I think that gives a kind of a consensus of where you wanna go, and I'm gonna start with you, Steve. Are you okay with the 1118, or do you wanna see adjustments, or what's your thoughts on it?
Well, I certainly want to see justification for those positions, but to your point earlier, Mr. Chair, that I still believe that we were not going to have any new positions in this particular budget. So there would have to be some extreme rationale for me to approve some new positions.
Commissioner Hoag?
Well, I would echo Steve's. You know, I understand why they put them in there. I think it's a starting point, as Tim says, and we don't know the needs of these departments with all of the changing things going on and the extra work that's required from state, federal levels. So I think this gives them the opportunity to come forward and try to justify these positions. So again, I think this new method of the budget is good. At least it gives the department heads the opportunity to tell us their needs, and then we have to sort it out from there of what is justified and what's not. 11.1, I think, is a pretty, it's a very high number, and one that we all, I think, know will likely not fly. It's unfortunate that we're in this position, but we've just got to figure out a way to dig ourselves out of this.
Commissioner Franzine?
Well, I agree with you. We've always said that after the 19 people last year that we weren't hiring anymore this year. And 11.18 is way too high.
Commissioner Brecken?
I think that in this position, you know, and the way that things are in the world today, is that we aren't capable of wanting to do a wish list. I think we have to be very practical in our approach to our budgeting, and we have to really keep it screwed down as tight as we can.
Okay. I don't know if that helps to give some direction, Mr. Hool?
Mr. Chair, members, it does. I appreciate your communication of that. That message is going to be conveyed loud and clear. I'm aware of some things that are in the budget already that I've had conversations, for instance, with Scott. We lost the revenue associated with housing the DOC inmates, and those of you that have been on the board a while recognize that when we added that DOC contract, we opened a pod. And so if the contract is going away, we may need to look at closing the pod. And the offsetting salary savings that would be associated with that are not included in this budget. And so I want to make sure that we work both sides of the ledger, both the revenue side as well as the expense side. I have had preliminary conversations with Scott. I'm not talking about a layoff. I am talking about some attrition that can and probably should occur given the loss of DOC inmates. They have budgeted, I think, for 0 DOC inmates in 2021. I'm not sure if that's realistic yet. So I think there's plenty of questions that need to be asked yet, and that's our intention moving forward. But the first thing we're going to focus on is the FTEs that have been proposed. They will get close scrutiny before they even make it to making a pitch to you.
Mr. Chair,
Yes,
I'd just like to let
Pull the mic closer.
I'd just like to let our administrator know that if they close a pod, we will lose employees. So I don't want those employees to, you know, to say, oh, well, we had these 12 and we lost 12, so now we're okay. We should have a decrease of employees if we close a pod.
Exactly. That's the point.
Anything else, County Board? Okay, are we moving on to the 2021 Capital Improvement Projects Budget Submittal Review?
Yes. So just one last thing on this is that very first blush. I mean, this is 4 days worth of work to get to this point, and there is a lot more work to be done in that area. With the CIP, I sent out the listing to everybody yesterday afternoon with what is in our current submission. It is 4.2, where did it go? I closed that one. Hold on. We are at 4.296 million in capital projects. This is the original submission that was put before the CIP committee. There were items that were whittled out of this, items that were trued up to realistic expenses, and some areas that actually had quotes attached to them to allow us to get to the numbers we're at. At the bottom of the sheet that you guys were sent last night, you see there's the 4.296 in capital projects. We do have additional expenses towards capital projects, but they come from other funding sources, such as the restricted IT funds, which is our Fund 2, solid waste fund, and the landfill fund. Those don't impact our levy as those funds already exist. There are, in our budget conversations, we did have conversations about eliminating the CIP as a whole for 2021 as a method to help us bring that 11.18% down. There has been a lot of work done by the CIP committee to whittle this down even further than the 4.2. I believe there is a few different proposals that they have prepared that we can eventually look at. That gets down to about 2.6, but this hasn't been before SMT for their review yet. They did force rank them so that they have their priority listing of what the projects fall into. That will help them. We meet with SMT on next Monday to go through all of these and start to whittle that down. From my side, what I'm kind of hoping for is some direction on if you want us to look at reducing that CIP even further as a method to get us to that point and where we should go.
Mr. Chair, if I may?
Yes.
So if you look at that half sheet that Nick pulled up, there's 4.2 million in CIP. And CIP really isn't going to impact our levy if we're going to use that amount and don't do CIP for a year, but we're going to use it for fund balance growth. You're still going to levy the 4.2. You're just going to put it into savings instead of spending it on CIP. That is still an idea that I'm pushing on with the SMT. I still think that is something that we should be considering, given what we've just heard from our auditor. And if we can, I don't think we can get 4.2 million in savings out of CIP. There will be some things that break that we just have to fix, or a roof that leaks, a jail lock. But I do think that we can set aside maybe $1 million of that for the things that break, and maybe even authorize some of that expense to Debbie, because she has both facilities, and then maybe to Tim, but I don't think we're going to allocate anything for fleet. But IT and facilities, I think we probably need to, in case a network server goes down, a roof leaks. I'm hopeful that we might be able to get 3.5 million in contribution to our fund balance by taking a very, very austere approach. It's not something that I'm thrilled about. I don't think anybody is thrilled about. I think SMT members, certainly some of them, want to make the case stronger for more of an CIP program, but I do think that we need to correct where we're at with fund balance. And you can see the 1 million that's programmed in for fund balance growth in Nick's half sheet. If we could get another 3 million in fund balance growth out of a vastly reduced CIP, then we're at 4 million in fund balance growth. Whatever we can get reimbursed from the Federal CARES Act, and let's say that's $1 million, because we are making budget so far this year. Remains to be seen if we can hold that, but we are making budget so far this year, even with the COVID expenses that we've incurred. And so the reimbursement can be fund balance. So between those, 3 million out of CIP, 1 million that's programmed in, which is carryover from our old debt service payment, 1 million from Federal CARES Act, we might be able to make a $5 million contribution to fund balance growth within a year and a half. I still think strategically that that's a smart way for us to at least consider very, very strongly. And so I'm still pushing on that. And if I'm going in the wrong direction, I certainly need to hear from you guys.
The big thing to keep in mind with CIP is there is only 1.7 million, I shouldn't say only, but of the 4 million, almost 5 million that we collect in revenues for that side, only 1.7 of that is from levy. The other portion is from CPA funding from the state. Back when that was greatly reduced in the state's budget crunch, we moved all of that over to capital projects so that it didn't affect operations if they chose to reduce that amount again. So right now, that makes up almost a third or 2/3 of our total revenue for CIP.
Mr. Chair?
So, yes, Commissioner.
There's one thing that really jumps out at me on here, and that is the building remodel for community services. What in the world do they think they need to do now?
My understanding of the project, Commissioner Franzine, is that it is for remodeling in their lobby. I know that Kara has had conversations, I've had conversations with her about the likelihood of that prevailing in the CIP. Is not great. It is in the CIP and has been there for a number of years. But I do think it would require board approval to move that forward. And at this point in time, I'm certainly not recommending that we move it forward.
Thank you.
Okay, so another question is, we used to, believe it or not, we used to go through this list line by line.
Yes.
But I guess we're not doing that anymore, so I've got a couple questions. So, employee reporting environment tool setup and training, what is that? And is that, I'm trying to go across, is that $18,000? What is that? Does somebody know?
So today with us, we actually have both Jay
Yeah.
Sinkic, John Melson, and Joe Luxick from
great.
Fleet Fleet IT and Facilities. So any questions that you do have, they can actually
Okay,
help with that.
so then I'm assuming that's towards Jay. What is that? Did you hear what I said, Jay?
Yes, I did. You know, across the county, throughout the departments, we have a lot of data that we take and present to the departments for better decision making. Some of that stuff we do in-house. Some of that stuff we get outside consultants to help us with. There's various number of degree of difficulty getting those number crunching. And that is basically professional services to help us when we get stuck. And that's based on history, how much we've used over the past years. And when we get stuck, a report doesn't work, we're not getting the information we want, we can't solve it ourselves, we have to go get some outside help. Then we can fix that report so that the data is meaningful again. Otherwise, we're just giving the departments garbage to analyze and use that for decision making.
I guess I don't like that explanation, because it says here, employee reporting environment tool setup and training. It sounds like you're training employees, and the way you explained it to me, it sounds like you're hiring consultants.
Yeah, I guess the name should have been changed. In the past couple of years, we actually had a data committee where we were taking people around the county and helping them understand their data so they could get more out of it. And we did bring in some outside training classes so they could start understanding what they have so they could help IT out. Again, you know what, I always look at us in IT, a lot of this, we use professional services because I always relate it to like a doctor, right? You go to your doctor, and we're doctors, we're general practitioners, but there's times we need a specialist, like a heart specialist, an eye specialist, or a foot specialist, or some specialist to help us with that task.
I wish you'd put a different name on it then, because it sounds like you're training employees, and that doesn't sound like that is. So,
I agree.
Okay.
I agree, Commissioner, but we
So-
probably should take the name training off because we're not training employees anymore. That's just more for the professional services when we need that specialist to help us.
Yeah. Can you just You know, going down your list, I might as well stay on you, Jay. So, phone enhancements, that makes sense. What's VDI?
That's our virtual desktops. In a number of the departments now, we no longer have PCs. It's a virtual desktop, and what it is a little box that sits on your desk, and the computing power is actually on the server. And it's more cost effective for those departments that can utilize it. But again, that we are not planning on expanding that at all next year. Again, that's for if something breaks, which has happened in the past, and we need to have that outside expertise.
What about the next one down? It's SAN enhancements, which is 41,500. That's a substantial amount. What is that?
That's our disk storage. We keep on adding more and more storage as we go, you know, any document that comes in that we scan, any piece of paper that comes in goes on our disk storage systems. And not only do they come obsolete, we're on a 5-year life cycle with them, but we need more storage annually. I mean, our storage growth keeps going, climbing and climbing. And that's to keep, otherwise, if you have no place to store your document, then we're all in trouble. So it's a replacement and an enhancement.
And then the next one is network. What does that mean? I don't know what that means. What are you spending money on there?
That's our switches, backbone of the whole network. We have about 100 and some switches across the campus, plus our wireless activity. We have 120 access points, wireless access points. So when you come in the county and you can move around, and quite frankly, the wireless access points are end of life already. But where you have no plans on replacing that infrastructure, we're doing as a break, repair, replace type thing as they go forward. But that was one area there's two areas that really I kept in there. You'll probably the next question is servers. We have to have servers, reliable servers, so they don't break. They're on a 5-year life cycle, plus our storage.
So some of these things that are.
Sorry.
These last few items that Jay's talked about that you had here. In 2016, 15, 16, 17, they were in our operating budget. Those were annual amounts that we were spending for update, maintenance, those types of things for those things. When we were trying to shift things off levy, this was a segment that we said, well, some of that could be paid for out of the CIP funds. We could pay for those in an off levy area. Truly, they're not necessarily capital in most cases, and technically probably are more appropriate in an operating budget. We're starting to funnel some of those back into an operating budget, but we have limitations on making sure we don't want to hit everything that's on levy in that particular instance. IT doesn't have outside revenue sources. Everything is basically funded off the levy. So any adjustments that we make, we have to offset some of those as well. So it's one of the things Jay and I have been talking about is which of these should truly be operational in nature and really should be a net operations budget instead of the capital budget.
Okay.
So Commissioner, if I may too, on the submittal on this, my numbers, the original submittal was 1.3, almost $1.4 million submittal for capital expenditures. I looked at it and said, what do we absolutely need to keep the lights on for 2021 and keep whatever we have operational? I cut the budget already going forward by $946,000. So almost $1 million, and what you're seeing is what I feel we need to have to keep the lights on for 2021.
This is the original submittal. So the adjustments that Jay's talking about that he's reviewed and has made already are not reflected on this spreadsheet yet. This was what was originally submitted. So there has been, as I think Nick and Tim both mentioned, there has been some changes to what you're seeing here, but we wanted to give you the full view of everything that had been submitted for capital for 21.
Okay, so any questions from the commissioners? I don't want to be the only one. I guess I'm the only one asking questions. Any questions? Steve, you lean forward.
Yep, Mr. Chair, if I might, Nick, and this is just clarification, and these are immaterial numbers, but under the facilities, we got $20,000 for a shooting range roof. Under sheriff, we've got $10,000 for a rifle range roof. Is that the same building, and why would there be two numbers?
I don't know if, John, if you can answer that one?
Yes, the sheriff's department had asked us to get a quote on replacing that roof, and the roof does need to be replaced. I was looking at putting on a metal roof, and it currently has a shingled roof, so that we could walk away from that roof for the next 40 years or so. I don't know why the sheriff has in there 10,000. That could definitely be removed, and if we want to go with a shingle roof, that number could be dropped down. So,
Okay, so it is a duplication,
yes,
same roof.
same roof, yes, sir.
So next question then, Nick, would be, we have the shelter for the fire tower in Pequot for 50,000. That's already in place, correct? And we would have accounted for that.
Jessica, do you know if that's actually in place or not?
It is. This is actually for another shelter they want to put up right up next to the tower.
Up on the higher level.
Yes.
Okay, so that's really a wish list one in my estimation. And then South Long Lake, is that one already in place, or is that to
No.
be built?
No, it's not.
To be
complete.
built.
To be built.
The key with those two is those do not come from our levy-based CIP.
Right.
Those are actually from Public Land Management Fund.
Yep. So then, one last question, and maybe Tim can help with this. There's the courtroom 2 build-out for $400,000. And I think we had a discussion, I think Commissioner Coring, you and I were the two that were here that day. And we said that we would talk about that, but it wasn't necessarily going to be one of the top priorities. There's some internal discussions that they're having yet among themselves and the prioritizing that need, correct?
Mr. Chair, that is correct, Commissioner Barrows. And I don't know if we could deliver a project to build that courtroom out in 2021. And so in my mind, the study dollars, if anything, would be the only appropriate expense in 2020. And I think, you know, what your questions are reflecting is that this list has not been scrubbed.
Right.
It hasn't been scrubbed at all. It's just the first cut, if you will. And so to Jay's point, the 3 areas have already come back with a seriously reduced capital projects list. And I'm still advocating that we consider going further than that. And so I think it remains to be seen what kind of a capital projects list that we're going to propose for 2021. And in order to build fund balance, I'm going to be pushing hard for it to be extremely austere.
Thank you. Thank you.
So a question for John, if you can get back on the screen.
Yes, sir.
So a question for you is, well, this is more of a comment to you, that I hope that when you are, you know, I don't know you very well, and I don't know how you operate, but I'm telling you how I operate is, you know, yeah, I guess, yeah, I'd like to be driving a Cadillac, but I can't afford a Cadillac. So what I'm saying is, you know, I see on your list you've got some more door replacements. I know you replaced the doors down here, and I asked you the question. They said, oh, yeah, they needed to be replaced. I guess I'm going to say I'll go with your judgment on that. But I do know that you went with black doors, and I think it cost 30% more for those doors. I guess I don't need an explanation on that, but, you know, I don't know that the taxpayers here want to be paying for a Cadillac thing every time. You know, if you put on a shingle roof, you can get shingles that are probably good for 30 years, you know, and I'm telling you, if you're suggesting the high quality, the most expensive thing every time, I'm not agreeing with you on that. Does that make sense?
Yes, that makes sense, and that's not my approach. We typically bid things out and look at things from a value perspective, a maintenance perspective. What are the future costs going to be associated with it? I'm not looking to buy Cadillacs. Chevrolets work just fine. So we start at that point, and we start to look at the whole value of the process and what's the usage of it. And to replace a door that hardly ever gets used, to put a Cadillac door in there, to use your terms, doesn't make any sense. Now, if it's a door that's getting 300 passages a day, then maybe we need to go with a higher quality product. So we're always looking for that balance of, what's the usage, what can we afford, what's the long-term maintenance, all those factors come into play, not just looking to buy the top of the line every time.
Any other questions?
Mr. Chair?
Yes,
You know,
Commissioner Brecken.
I do think this list needs to be cleaned up and scrubbed down so that we can do that.
Correct.
I can see us reviewing that in maybe a little different way so that we can have smaller bits of this so that we have our input, and also be able to understand what each of these projects really are for, so that we're not just, again, approving something that we don't even know what the outcome is, the purpose of the outcome.
And I will say that in the past, in budget committees a couple of years ago, we used to go through this line by line. And if you remember, Tim Hool, we talked about an antenna that was on there for a large amount of money, and I guess I can't remember the whole details of it, but we scrutinized it, and we came up with a different alternative of going off the repeater, I think it was, of going off somewhere else. I can't remember all the details because I'm getting Alzheimer's, but I know that I personally think that staff puts this together, and I think it's good for the elected people to go through this line by line and have questions and question this stuff, because I think that's what our job is. And in our mind, if it's not a good explanation, then we either don't do it or we do something different. So, anyway.
And Mr. Chair,
Yes.
I do believe that last year was the first year that we didn't go through this line by line, and things got through that I found out about after the beginning of the year that I wasn't happy about.
Yeah.
So I would appreciate the line by line, and the person who put the request in be there to tell me why it's a need, not a want.
Yeah. And don't worry, and it's like I've told you before, Nick, you've called and they said, oh, we don't really have that many items, we don't really have much to talk about. I think there's always something to talk about, at a budget committee meeting, or get some, just to talk about things. I mean, I've got time to stay here as long as it takes, so anyway. Go ahead, so now, are we done? That's the first blush on that one.
That is the first run-through of what was submitted. CIP did go through this multiple times and has a few different recommendations, but we wanted to present it to SMT and let them have some input as well to try and defend some of their items that they have in the list. We did, as a CIP committee, reduce this almost $2 million.
Okay.
So we want to let SMT kind of go back and forth on if they can work with that or not.
Just one other question that popped into my head is, so let's say I'm the county engineer, and I think I have a great idea for a capital project that I think is a great idea, but I come to SMT and I lay out my idea, and SMT says, well, that's a dumb idea. And being that I can never go to the county board members and talk to them, and I can't, because ultimately we're the ones that make the decision, not the SMT, that this project might not even, a county commissioner might not even know about some idea. So I don't know, I just don't know if I believe in that structure of, you know, goes to SMT and SMT shoots something down when really that should be coming to the county board and having the explanation and they make the decision. Does that make, am I making any sense?
Yep, and that's
As
why we
always?
provided the full list to you, so that you have that entire listing, as well as SMT got it at the same time that you all did. So this way, everybody can see what that initial submission was, and then when we come back with that second round and go line by line, you can call that out, or they can stand up and try to advocate for any of those items that may have gotten kicked out during SMT.
And Tim, just to expand on that, I just want to say that I want to make sure that not only on capital projects, but on whatever, I don't know, I can't think of anything right now, but I'm concerned that if something, you know, comes to the SMT and the commissioners don't, and it's shot down before it even gets to the commissioners might think it's a good idea. I don't know that I don't think that's the proper way to run the operation. Does that make sense?
Mr. Chair, members of the board, that's not really what ends up happening. And
Okay.
every SMT member, I believe, is well aware that whether it is the SMT that doesn't agree with one of their ideas, or whether it's me who doesn't agree with one of their ideas, all of them always have the right to come and talk to the board about it. And the only requirement is, I'm going to tell them, if it's me that they disagree with, I'm going to tell them what I'm going to tell you when they propose it. They need to tell me what they're going to tell you so that there's no ambushes and no surprises and we can work together the next day. But there is no stopping anybody from bringing something directly to the county board. And I'm pretty confident in telling you every SMT member is well aware of that.
And they know that. Yeah. Because if you think about it, there could be a conflict. Let's say the county engineer says, you know, I think we need to move forward with Ojibwe Road now. And let's say it's not you, but let's say it's some other county administrator that's here, and there's a conflict between those two people, and that decision should be brought to the county board. You follow? I think you know where I'm going with that.
I do. I can't speak, Paul, to what a different county administrator would or wouldn't do. All I can speak to is what I do.
Right.
And that is the standing rule. I've reinforced it many, many, many times with SMT members. If any of them told you differently, I'd be shocked. I think every one of them are well aware that they can go over my head anytime they want to. We just have to preserve the working relationship moving forward, and that's only about no ambushes, no surprises. And it does happen. Not very often, but it has happened.
Yeah, very good. Is that it on the, any other comments on the 2021 capital improvement projects budget submittal review?
Maybe just one, Chair.
Commissioner
Nick,
Hoag.
yeah, maybe you can answer this, but I know early on there was some items that were read off that maybe would better fall under operational. As we look at the second go-around of this, could we potentially, and maybe it's not large enough to break it out, if it's listed as capital day and it should be operational, and then I think the mention of maybe some other, like the shelters that may be coming from other sources rather than the levy, can we kind of get a true picture of what the capital, the direct impact to the levy are for this capital improvement list? Is that doable, or?
We can probably pull out what is operational in nature and put that into a separate list,
Yeah,
just to kind of give an
see if-
idea of what should actually be pulled out of the CIP plan and moved over to Fund 1, Fund 12. We can probably do that. I don't know that I can get you something that's going to show you exactly which projects in CIP are hitting levy versus other revenue sources, but we can definitely split out the operational
What we can
piece.
tell you is that 1.7 million, regardless of which projects are selected, if they're Fund 43, if you look on that list, it talks about the funding source. If it says capital fund, 1.7 million of that is what's slated to be hitting the levy for 2021.
Okay.
If it's beyond, if we have a capital spend that's beyond 1.7, that's whether it's through public land management, solid waste, whatever, some of those other funds.
So in a sense, you've kind of done that.
We already have slated to not spend any more on levy, regardless of what the capital spend is, the levy would be the same amount that's allocated from 2019.
So that example of the shelter that Steve mentioned would,
That would be aside of that.
oh, okay.
I
all
think
right.
you're
That-
hitting
that's-
on, I think you're hitting on something, Doug, is because that money, that's restricted money that can really only be used for stuff like that. So that's not levy dollars at all. So why would, I guess, maybe separating that out might be I don't know.
I think it's still important.
Thanks, Deb.
I yell, but I have a big voice, but.
Yes.
I think it's still important, Mr. Chair, that we still have the conversation regardless of what the funding source is for the project. I
Right.
think you still need to look at it and look at the merits of the project regardless of whether it's being funded on levy or whether it's being funded off levy. Even though a project may be funded off levy, the resources that are needed to deliver on that project may be funded from a department that is funded a different way, may draw that resource down in order to not deliver a different project if that's the case. So I think regardless of what the funding source is, we have to look at the projects on their individual merit as to whether their wants or needs, and also as to whether or not they make sense with what the vision and mission of the county is too.
And I think you're exactly right, but the only thing is I want to make sure that, you know, when we have a timber sale and we're giving that money back, if we're not spending that money, we're actually giving more
Correct.
back.
Yep.
So we're enhancing and building up
Yep.
the infrastructure and I will say, I'll admit, and I know, Steve, you'll be surprised to hear this, but if before I got on the county board, I thought county parks was the stupidest, dumbest thing that I had ever heard of. I have completely changed my mind, and the reason why, I've been to the Milford Mine, and it's a beautiful park, and I drive by the South Long, yes, it's in my district, yes. But when I lived in St. Matthias, we had a community park that the community went together on their own and they created that 120 acres. Nobody helped them, nobody at all. But when I go home, I have to go by that park every day. I am just, my mind is blown away. Yesterday, on that hot day, that parking lot was full down there, and these people are using that, and they're using it, and it's their money and they're enjoying it, which is good. Another thing that kind of pisses me off is when the pandemic was going on and I wanted to get out of the house, went up to Crosby, and I thought, I'm going to go up to that overlook, if you've ever been up there with a mountain biking trail. So I go up there, and I'm just kind of sitting there getting some solitude and trying to, you know, take it all in. And just, it was a great day. I come down the hill, and some guy stops me. He said, "You don't have a sticker. You got to have a sticker to be in here." I said, "That's news to me." "Oh, yeah, it's changed now." So this guy, and I've talked to several people that have been up there, now they want to, besides you paying all the taxes in the world, now you got to have a damn sticker to go to that park. So I've been meaning to write a letter to the editor and say, you know what, if you don't want to go there, come on to the Milford Mine, or come on to South Long Lake, or come on to the Fire Tower Park. There's no charge to come there. So there's where I'm at on that. So that was kind of a rant. That's my rant for the day. Feels good. So anyway, if nothing else on that, then I guess we're on to number 4, financial status update.
So for budget versus actuals through the end of June, we were over budget on revenues, which is a good thing, by 3.3 million. But as an offset to that, we were over budget in expenses by 3.2 million. We're still to the good, $70,000, but we are over budget technically. Part of this is timing. Most of that, actually more than what is showing in this, is highway. So it's just a timing issue with highways expenses versus when the revenues come in from the state. This should correct over the course of the rest of the year. Fund 12 is in a good position. They're over on revenues, under on expenses.
That's community services.
Yep, community services is in a good position. General fund is right on budget with revenues and expenses, as is capital projects at this point. For our cash flows, if you remember in prior years, we talk about June is our lowest point for our available cash flow. That again is the case for this year. Last year we were negative $1 million in available cash. This year in June we were negative $3 million in available cash. There are a lot of restricted funds and investments that we have that offset this, so we aren't in a position where we don't have money to make payroll, but we are in a position where it shows that our fund balances at year end are too low for where we're at, because we should never be below that $0 mark for our available cash. That is all I had for financial status update on that portion.
Next time with this sheet here, I'm not gonna remember from this time to the next time. I probably remember general fund is 1, but 10, 12, 31, 43. If you just put
I'll put the names, yep.
Right, either on the side or down below here, just so
Yep,
so you don't have to explain it every time, so.
We will
Any
add
other
that.
question? Pardon me?
we will add that.
Okay. Anything else, Mr. Hool?
Nope.
Anything else, Commissioner Brecken?
Nope.
Commissioner Franzine, Commissioner Hoag, Commissioner Barrows, Deb, Sheriff's Department, Nick? Okay, I guess if there's nothing else, we're done with Budget Committee for today.
Thank you.
Thank you, Nick. Thank you, Debbie.
Thanks, folks.
If you